Hello, hello. I hope everyone is staying warm out there. This is Dylan Langei, branch manager and home loan officer at Evergreen Home Loans here in Bellingham in Whatcom County. You're either getting this via email or on social media, or seeing it through various channels, or you're a trusted business partner that we've worked together in the past. And I know I skipped last month. I took a 1 month break. I've been doing this newsletter for almost 2 years now and took a little time with the family, but wanted to come back and on this video, as we always go through, we'll go through rates and turn times and things like that. But I'm going to do a 2024 real estate recap. I was just in an awesome economic presentation by Matthew Gardner, who has his doctorate in economics. He was a UW professor, and now he's got his own thing. He does over 70 presentations a year all across the United States. So I'll share some really, really cool national data and then some hyper local data to Whatcom County, as well as some national real estate stats that I thought were pretty fascinating. One of those being that 74% of real estate agents closed 0 transactions in 2024. So, I just thought that was pretty wild that if you're on the street and you meet 4 real estate agents, 3 of them have not closed a transaction last year. So it really, really matters who you work with. Hopefully, you're a real estate agent, or if you are a real estate agent, you're thriving in this business. It's just because you have a license does not mean that you're a real estate agent. This is the same for loan officers. I'm not just harping on real estate agents. The other stat I saw was in 2021, there was 420,000 licensed loan officers in the nation. 93,000 renewed their license in 2025. And in 2024, only, I think it was about 42,000 loan officers closed over $6 million in production. So pretty incredible stats. That means that less than 1 in 4 loan officers are still in the business from 2021. So if you did a refinance, you got a loan, obviously if you got it through me, I'm still here, but there's a 1 in 4 chance that they're still in the business as a loan officer. So, and that same stat is true with real estate agents. Many of them still hang their license, but 74% of them did not close a transaction. So as I've always said in this video, it matters who you work with. If you're a real estate agent or your loan officer is no longer in the business, contact me. I've got amazing partners. I've got amazing people in this community. I'm still thriving, and I just wanted to first say thank you to anybody that has supported me in 2024. Personally, I had an incredible year. I was up almost 50% from 2023, closed $40 million. It was 77 families that I helped either buy, refinance, remodel a home, new construction, all of those things. So incredible year. Really, really grateful for everybody. As you know, my website is whatcomhomeloans.com. You can find all of our resources, previous videos, different resources there, some testimonials, the application. And then also my team had an incredible year. I got to give them a big shout out. We were the #1 lender in Whatcom County, helped 371 families, over $162 million in production. 99% of our loans closed on time, which was like the coolest stat I thought ever. And our application to funded average with those 371 loans, 13.2 business days, which means we're closing loans fast. We're doing a good job. I think we had over 200 new 5-star reviews for our team. So hats off to my team. Really appreciate everyone there. We have something called President's Club too at our company. 4 of my loan officers were in the top 15% in the company, including myself, which was pretty incredible. I've got 7 loan officers. So over 50% were in the top 15% in little old Bellingham. So we do a really great job, and we just really appreciate any and all people that you've connected us with, or if you've gotten a loan with us, we just really appreciate you. But anyway, enough about me. Let's jump into the newsletter. So you should be getting this. If you're seeing the video on social media, maybe you're not on the email distribution. Let me know if you want any of these PDFs that I'll show. My quick nugget is we're going to go through trends and happenings in 2024 and beyond. This is something that I posted on my social. I thought this was extremely fascinating. The average age of a home buyer in 2024 was 59 years old, up from 49. 70% of buyers did not have a child in the house under the age of 18, right? So the buying population is getting old and they're getting wealthier. 77% of all sales. 26% of sales were cash. It's usually about 30%. 6% of sales were for sale by owner. if you're a real estate agent or if you've watched the news, you know about that buyer brokerage service agreement. Everyone was freaking out that this would just, everyone's going to sell their property off market and they don't need a real estate agent. It's not true. You need a trusted real estate agent, just like you need a trusted lender who knows what they're doing and who actually closes loans and closes houses. So 6%, 17% of sales were multi-generational. So a lot of people having their parents move in, having their kids move in, they're all getting on a loan together. 24% of sales were first-time homebuyers. That was down from 32%. We'll talk a little bit more about that. The average age of a first-time homebuyer was 38 years old last year. That's something I'm really, really passionate about. Part of that is household formations happening later on in life, interest rates. It's hard to get into the market. I'm very, very passionate about the wealth that can be created through real estate. Average age of a home seller was 63. Once again, 59 for a buyer, 63 for a seller. The buying and selling population is just getting older and older. Average holding time of a house was 10 years. It's typically 5 to 7. I think that's a lot to do with COVID and the low interest rates, which I will talk about as well in a second. And 66% of buyers worked with their previous real estate agent. Once again, 74% of real estate agents did not close a transaction. So vet your people, vet your lenders, vet your real estate agents, vet your inspectors, vet your insurance agents, right? The whole real estate market is just different than it's been in previous years. Alrighty, what I want to jump into next is this economic report that I was at from Matthew Gardner. So I've got a few pages that I want to go through, and bear with me. So this is the 2025 economic forecast. This is from Matthew Gardner. You can look him up. He's an incredible, incredible guy, has an awesome British accent. But the Fed is in a quandary. By most measures, the labor market is soft. However, inflation remains sticky and could rise again. When inflation rises, mortgage rates go up as well. When inflation goes down, mortgage rates go down. That's kind of the correlation there. Labor force growth was significant in 2022, 2023. That's probably just coming out of COVID, but restrictive immigration policies could be a countervailing force. Extended tax cuts, which if implemented, we'll see with the new administration what happens. And then the pace of the U.S. growth will be pressured by budding trade wars, tariffs, of course, and a Fed that could slow the pace of rate cuts. Next page I want to show you is number 20. This is interest rates. This is why interest rates went down and up. Rates were headed lower before the pandemic. You can see the years here, 2019. You can see the interest rates up here. Okay, then the Fed pushed them lower. They were buying a bunch of mortgage-backed securities. This is not real life, right? They were down to 2.75. It was incredible. It was crazy. But then when they withdrew their support, they stopped buying mortgage-backed securities. In 9 months, mortgage rates doubled. And then economic resilience drove them higher. Slowing economy and the Fed helped lower rates. And then the Trump effect is the last one there. We won't get political or anything, but any new administration, things will change. Washington State remains locked. 79.1% of mortgage homeowners have a rate of below 5%. So if you're looking in the market and you're like, gosh, there's no good listings, why is that? Well, people are keeping their properties as rentals or they're staying put. Just like I'm sure I got many of you watching this, an incredible interest rate during COVID. If you're at a 3%, my guess is rates would have to be in the 5s, maybe low 6s to make you even think about moving. People will, of course, move because of death, diapers, right? There's the 4Ds or 5Ds or whatever it is, but people are not moving because of discretionary needs. I just want a different house. They're staying put because look at this, 25% are under 3%, 38.7 are from 3 to 4%, 15.9 are 4 to 5, 5 to 6% is 7.9, and over 6% is 11.6%. Average interest rate is high 6s right now. So that was 23. I want to go to 24. Rates will come down. That's Matthew Gardner's projection is by end of quarter 4, end of the year, we'll see mid 6s. So not a huge change. I mean, if you're somebody sitting on the sidelines waiting for 2.75, it's not going to happen. But seeing, lower 6s, maybe high 5s in the next year or two is definitely plausible. But what will that do to home values? Well, if more people can buy and it's more affordable, home prices will go up, right? So my thing is always buy now. You can always refinance later. Can't bank on that refinance. So he meets with a bunch of economists from Wells Fargo, MBA, NAR, Fannie Mae, and Gardner is Matthew, and that's what they think. This was their projection for quarter 1 of 2025, which, as you know, we're at high 6s. So some of these are on, some of these are not. and then what the projection is. But they all think that rates will be coming down by the end of the year, which I believe is going to stimulate the real estate market. Households by income. Where the growth is happening is not under $100,000 in annual income. It's actually these higher paying jobs. I thought that was really, really fascinating. So if you owned real estate in the last few years, you have done incredible. The only year we've seen a little bit of a dip is 2023. Every other year, it's been massive, massive growth. I remember when I got in the business in 2015, I had multiple clients telling me, I'm going to wait for this market to crash. They missed out on hundreds and hundreds of thousands of dollars in equity growth. Real estate is always a great investment. The market briefly returned to normal. So we've been in a big seller's market since 2019. Even before that, really haven't been in a buyer's market since 2015. It's when I bought my first house. So didn't know. Actually, I bought it in 2016. I lied. We're in a little bit of a buyer's market. So not that I knew what I was doing at all. When I have clients come to me and say, hey, I want to live in Bellingham and I want to pay $450,000. This is the median sales price, right? You're going to Sumas or Maple Falls, right? So this is Cedar Woolley, Bellingham. This is the percentage growth as well from 2023 to 2024. So people that were in 2023 saying, I'm going to wait for this market to blow up. There's no way home values can go up because rates are so high. You were wrong. Home values did, in fact, go up. Home prices, Matthew expects them to go up this year 4.5%. Obviously, if mortgage rates go down quicker than he projects, then home values will go up quicker as well. However, housing affordability is a problem. I'm not saying it's not. We have not been affordable in Whatcom County since 2017. So if you've been waiting since 2017, you've also missed out on a lot of equity growth. But I am sensitive to the fact that it is tough to buy a home. Our average, we did 371 loans last year. Our average mortgage payment was $3,550 that a borrower took out. And so I understand that is not a small mortgage payment. I am definitely sensitive to that, but those are the realities. This is all about just reality of the market. This is housing affordability for first-time homebuyers. It has not been affordable really ever. So first-time homebuyers definitely have a challenge. And this is his housing forecast. More listings will equate to more sales. Anticipate supply rising 8 to 10%. Home prices will rise again, but the pace will be restrained as affordability constraints continue. But if rates go down quicker, right, that could change. It could become more affordable, but then prices will go up. The vitality of the housing market will be direction that whatever the new administration takes, and fiscal policy, which nobody knows. And if they tell you they know, they're wrong. This is what I love. Homeownership creates wealth. There is no better way to create wealth. I know the stock market's fun to play around with. I definitely diversify. Stock market's been booming, but real estate, you can live in your house. That's what I love about it. You can raise your kids. I've raised my son in our house, or we've raised our son in our house. And so I thought this was a pretty cool graph of average wealth that a homeowner has versus a rentor. If you want the full slide deck, just contact me. I am happy to send that out. Let's look at, as we always do, interest rates. So you can see here, this is for a $700K purchase, 10% down. This is the interest rate, 6.5. Principal and interest would be $39.82, and the points would be 1.8 points, which is 1.8% of your loan amount in a one-time fee. That's for great credit, all that good stuff. But here's kind of the mortgage interest rate trend. So we had this, I like to call it a few-week refi boom, where we saw mortgage rates get right around 6% for a 30-year and 5% for a 15. We are back up to high sixes. This is typically with a point buy down, right? This is Freddie Mac's data, by the way. But we're down from January 16th. So we're seeing these slightly move downwards. Mortgage applications, though, look at this in the last month. There was a 33% increase from January 3rd to January 10th. It's the biggest increase that we've seen. I think it was in the last 3 years. Look at that. The last one was in 2003. The last biggest one was March 6th of 2020. What happened then? COVID, right? Mortgage rates dropped 55%. So pretty incredible stuff. Mortgage trend is down. Mortgage application trend is up. As you know, we can close loans quickly. Just get pre-underwritten, get approved. More listings are coming once the snow melts, at least here in Whatcom County. Stay safe out there. Stay warm out there. Once again, I really, really appreciate your business. I appreciate your referrals. If you know any friends, family, coworkers, clients of yours that are looking to buy or sell real estate, contact me. I would love to help them out and make it a great year. See you next month.